Hey guys, Kill Stokes here. Welcome back to another video. Thank you as always for joining. If you guys are brand new, I'm an investor, a Forex trader, and a trading coach over at tier1trading.com. Now, typically in these videos, I'm giving you a market outlook, showing you kind of the best ideas that are on my radar for the week ahead. Today, we're going to do something a little bit different. I want to share with you a trading lesson. So we're actually going to take a look at my trade of the week from this past week. I'm going to walk you through it, show you why I was interested, how I was looking to get involved, and then also share with you a very powerful lesson on trading psychology. So make sure you watch to the very end because I'm going to come back and we're going to have a nice discussion on whether this was a dumb trade or a disciplined trade. So you can see that identify we're breaking these highs right here. This is going to be the breakout pattern that I looked at on the lower time frame. This was going to be an ascending triangle, right? As you guys know, one of my favorite patterns in the market, right? Let's take you down to a 4-hour. I'm going to hop over to Ninja real quick because I still do love my Ninja Trader. I've just been working on TradingView because of a few gap issues, and I'm trying to see if this volume thing actually makes a difference. But Ninja Trader here, you can see we have a beautiful VS1 level. We do have something else setting up, so we're going to keep that in mind. We'll use that for our projection. But we have a beautiful VS1 level right here, representing our previous structure highs, our double top, boom, 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 boom. So basically the market did this, right? Here, we came up, we topped, came back down in the structure, boom, we double topped, right? Boom, not a double top I was interested in because again, that retracement came back into previous structure highs. So I'm looking at this as what? This is what I mean for you guys that may be new and I talk about we retested two lows or we retested too low, right? I'm looking for trend continuation. Now, here's what's interesting, right? So look at our lows here, right? Boom, fights back. We retest the highs. What happens with our low right here? Lower, lower, higher low. Right? Higher low. This is that morphing pattern which once was a double top, now has turned into an ascending triangle, right? And again, what's key about this ascending triangle is if we look at our previous level of structure right here, does it happen below or above structure? Apologies for all the lines here. It happens above structure. So not only do we have a break and close above structure, which is positive for a bullish move, now we had an ascending triangle, which is positive for a bullish move. So my anticipation would be that price travels up to our previous structure highs. Now there's going to be something that you need to take into account here. We do have an ascending triangle. Let me get this into our pro trade log real quick and then we'll follow up on it. Pound yen, 4-hour, ascending triangle. Shaboink, shaboink, shaboink. There we go. Ascending triangle. Now, a few ways to look at this, right? If you are does anybody trade the breakout here? Like, does anybody trade breakout patterns where they just look for the initial breakout and then trade after the breakout? Anybody? Or retail? Okay. I'll say, because depending on how you do that is going to dictate how you trade it. This would not be a great situation because this can typically, if you're going to trade the breakout, you want to get your stops below the previous, below that candle. The bad thing with this candle, unless you go to a lower time frame, is that's a very long candle. So that stop is going to be very large. That may be a situation where you have that rule in there where it says, okay, if I can't get trade on my initial attempt, which would be a breakout, then I look for retest. So you can still add layers to it where, hey, like my first strike entry is this breakout. But if the breakout doesn't give me an opportunity, then my second strike entry is this pullback. Does that make sense? We talk about that sometimes with like going from double tops to 2618s, right? Always have those. I think you should always have a series of ways to get into a trade because the market is not going to always give you what you want. So as you evolve as a trader, it's not just like, hey, I have one way of trading. This is my only entry. It should be, okay, this is my first entry. If that doesn't work out, This is my second entry. If that doesn't work out, here's my third entry. If that doesn't work out, then it's not going to happen. Like eventually, then so you just got to chalk it and be like, not going to happen. But you should be able to give yourself different ways to get involved in a trade, because sometimes you could be asleep, you could miss it, right? Sometimes the risk reward just doesn't work out, right? There's so many moving parts in the market that I think the more ways you have to attack a good trading opportunity, once you identify that good trading opportunity, let's put it this way. If good trading opportunities don't happen too often, so when you find one, you want to get involved. Now, obviously you need to be rules-based, right? But you don't necessarily just want to let those go. So you want to give yourself as many opportunities as you can to get involved within your rules, of course, instead of just letting it go. And that's at least my opinion in the market, because good trades don't happen too often. So let's take this and we can project it from here. Nope, I don't like that. So one-to-one measured move, I guess, would be up here. Fibonacci extension from this swing low to this swing high and back down. That's going to give you a 127 right at about 135.19. 1618 is going to be up at this higher level of structure we identified, 135.81. We can take a range break of the pattern as well, where I'll draw it back on, or I'll go back over here real quick. I'll draw it back on. Where the range of our pattern, here's the low, here's the high, equal range break would put us right at that 1618 as well. So a 127 could be your conservative level. I think a 1618 is going to be your more aggressive level. I'm just curious what this overall swing would give us. I feel like that would be a 127 as well. Nope, right in the middle. So yeah, good potential move here. Again, I like that higher level of structure that we can go to. Here's our previous level of resistance. Here's our breakout. Again, on the hourly, now you already have a break and close on the hourly. So if you want to get an entry based on that breakout candle, obviously it's going to be a little bit different, right? So you have your close right here. That candle's a little bit smaller. So instead of having a risk that's all the way down here, right? That's going to be right up here as well, right below that candle. You can probably get away if you're using a parabolic SAR as well. That'd be interesting to see where that would line up. I'm going to throw it on real quick because I'm curious, but I wonder what that would give you. That would take you way down here. Okay, so maybe not so much. So another thing you can look for is a retest, right? So now that we identify a higher high, higher close, now let's look for a retest of previous structure and a chance to buy it up. So just like your traditional pullback trade, that's what would be on my radar here with the pound yen. I think it's an excellent opportunity. There are many target levels you can shoot for, and you should not have a problem getting a good risk reward here. So yeah, 60-minute chart, 4 hour, 60-minute. Definitely think the pound yen is a very good trading opportunity. Any questions so far on the pound yen, aka we call it the beast? We can also see price action is starting to kind of starting to fade a little bit. Strong breakout. We're getting smaller candles. We're getting longer wicks to the upside. So we're losing a little bit of momentum. RSI is a little bit overbought, up at 90, right? So not be out of the realm to anticipate, hey, some type of relief. So we're preparing for that relief. We're looking to take advantage and buy that relief and see if we can buy it up. This is again, the more I talk about it, the less likely it is that it'll play out. But I think this is a very good trading opportunity. All right, so let's look at pound yen here. We're retracing back down. Let's go down to the 4 hour, or excuse me, the 1 hour. And let me just get things going here. So here's what I was looking at this morning. We had a double top and a complex pullback. Yes, it could be both. This would have been, I was looking at this last night. This is where I wanted to enter. I could not enter at this level. Who can guess why? This was the thing I looked at last night. I'm like, I woke up and I'm like, and I, I'm like, I'm gonna miss it because I saw this happening afterwards. I'm like, I'm gonna miss it. Yeah, we did not quite come to structure. So I need for us to come to our previous structure highs. Not gonna lie, wanted to cheat. Not gonna lie to you guys, I wanted to cheat. I want to be like, hey, it's close enough, right? Because right here, right here's my structure. It's right here. I'm like, hey, I like this combination. Little small doji right here, higher high, higher close on the pullback. Wanted to cheat, but I didn't. Stuck to my rules. And then as the night went on before going to bed, I watched the market do this. I'm like, it's not going to happen. This was a little retracement, right? You're going to see that's a 3D2 Fibonacci retracement as well. Right? I was like, whatever. To my surprise, I woke up this morning. We actually put in a complex pullback. So if we take kind of the move here, I guess we can take our ghost candles. We do our ghost candles. Where good old ghosties at? There you go. Take our ghost candles here. Let's move ghosty down here. You can see we had a 1-to-1 measured move, AB equals CD, good old ghosty. And then we put in a very nice candlestick combination. I'm going to delete this real quick and point it out to you, but you guys know what I like. Oh yeah, baby. Look at that. Yeah, I love that. Yeah, you know exactly what I like. Right there. That's my candle. That's my candle right there. Then higher high, higher close. Oh yeah. Wayne's like, you had me at pinball. I got the, yep. As soon as I see this, I get the Wayne eyes. If you ever seen Wayne's avatar, I get the Wayne eyes when I see the pin bar. They get all googly and whatnot. Start spinning around in my head. So that was my ideal entry. I was looking for this morning. Unfortunately, I could not make the risk reward work. And I'll show you why. Risk. ATR was 20, I believe, right? So entry would have been right here, higher high, higher close. Stops are going to be at 38. Targets. There you go. That's the unfortunate circumstance. Risk reward just didn't work. Now, this is the difference between, again, I'm not a trend following trader. I'm a counter trend trader at heart and very conservative with targets. I have a counter trend approach. Aside from on the range bar charts, I am a trend following trader on there. But this is the difference, right? So if you're someone that's shooting for a retest of previous structure highs like this, and when I say highs, I look for the closes, not the wick up here. I wanted to do this as well, right? All the little cheating things inside my body said, well, I just take the wick right there. I couldn't even justify it on the 4-hour because the 4-hour to close is actually going to be even lower than the hourly, but just couldn't make it work. But if you're someone that's looking for the extension, right, and we're looking for a move to right below 36s, I believe. There's a 1618 somewhere up there. That's going to be a different story. So if you're allowed to shoot for the extension, this is a beautiful setup, right? Would you guys agree? Beautiful setup if you're allowed to shoot for that higher level. Beautiful setup. Unfortunately, just with my trading style, I can't do this. Secondary targets would be here for sure, right? But initial targets got to be at the retest. So I just could not make the risk reward work. And I like to think that's discipline because you guys, this was my trade of the day yesterday. This was the setup I got all weird and blushy and giggly over. I even shared it on TradingView and social media, which I rarely do. And I waited all day. I waited all night. I came back this morning looking for a secondary opportunity. I thought I was going to get it. And everything else lined up but risk reward. And I like to think that's discipline because I did not take the trade. And what's cool is I told you guys, like I wanted to. And I was thinking of ways to cheat. Just stretch that out a little bit more. Move that stop a little bit higher. Because it's not too far off from a 1-to-1. It's not too far off. Hey, Anthony, it's not too far off. But that's the difference between Akil Stokes, the trader in 2020 versus Akil Stokes, the trader in 2008, 2009. I don't value any given trade over my rules because I've been on the other side. I know exactly what happens when I don't follow my rules. I've played that game. It is not a very nice game. That pain that pain is going to outweigh any type of pleasure I can get from this individual trade. So I wait for the next opportunity. Don't get me wrong. If it continues to shoot up, I'm going to punch myself every single day. I'm going to wake up and punch myself in the face. Be like, you idiot. But that doesn't affect the account size. So it's all good. So I hope you enjoyed that analysis. I hope it gave you a good insight on kind of what I look for in the markets as far as a technical perspective in making trading decisions. I also hope it shed some light on really discipline in trading psychology. And I want to ask you guys the question. After seeing that, do you consider this to be a dumb move by not taking it, knowing that in hindsight it went on to achieve what we thought it would achieve? Or was it a disciplined move? Now, for me, there's only one answer. You guys already know where I stand. And I would guess that you guys are going to share the similar answer just based on the quality of trader that typically comes to watch my YouTube channel. And that's a hats off to you guys, because usually the get rich quickers, they don't make it to this part in the video. But what's important to understand is that hindsight is always 20/20, and you can't base your decision off of hindsight, right? You look at this trade, and in hindsight, it went on and rallied up, and it's easy to say, oh man, Akil, that was a dumb move. You should have gotten involved because it would have been a winner. But here's the question I want to ask you. What if this trade would have lost? Would you share the same opinion? Well, probably not. You'd probably be looking at it and, oh man, I'm glad I did the right thing by staying away. So you see, we can't base judgment off of hindsight. And that's what many traders in the market do. They look at their previous trade and they kind of create that perfect scenario. Oh yeah, I would have gotten involved. Or, oh no, yeah, I would have not taken that one based on the result. And that doesn't work in real life, right? In reality, when you're trading the live markets, when there's that open black or white space on the right-hand side of your screen, you don't have that benefit of looking in the past and making the right decision. You have to make the right decision in the moment. And the only way to make that right decision is to focus on the process, not the outcome. Remember, by the time you get to the point where you're trading live, hopefully you should have been through a learning process where you're learning how to trade. You should have been through a strategy development process. You should have been through a back testing process. You should have been through a demo trading process. All of these checks and balances that are done to ensure that not only are you trading a strategy or a system that has a positive expectancy, but you're also at the right discipline level to consistently execute that in the market. Apologies in the background, I got a little angry one, but hopefully that message got across. So by the time you get to the point where you're live trading, maybe you don't have 100% belief in your strategy yet, because it is going to take experience to do that. But you do have a belief in that, hey, if I consistently do the right thing, which is follow the plan, I will get the results. And what matters most to you is the process. So even though it missed out on what could have been a decent trade, bigger picture, because no one trade really matters, bigger picture, what matters most to me is staying disciplined. Because I know if I stay disciplined with my plan and executing my trades and not taking trades that I'm not supposed to be in, I'm going to be profitable at the end of the year. If I make mistakes and hop in trades that I'm not supposed to be in or miss trades that I am supposed to be in, well, that's going to be self-sabotage, and that's how I'm going to lose. Hey guys, thank you for taking the time to watch today's video. Hope you enjoyed it. If you did, please do me a favor, hit that like button below. And if you have any questions or want to leave a comment or just say hi, feel free to use that comment section as well. If you want more videos, just look to the right. Here are some of the popular ones that are on my site. And I look forward to seeing you next week with a brand new video. So make sure you hit that subscribe button and make sure that notification bell is hit as well. That way you don't miss it. All right, until next time, plan your trade, trade your plan. Take care.